Hi, Mitul. Thanks for joining us.
You're welcome, Mark.
Well, it's been a while since we had joint intervention, 11 years. Does it work?
Well, it does work to some extent. It creates two-way risk. It creates some fear of this one-directional view that has been in place for the yen in the last few days has obviously now changed significantly. The complexion for dollar yen and euro yen, for that matter, has changed. And you know, in the past, when we have had significant joint interventions, it has had some impact at turning currencies around. But I think in the case of Japan, there's a lot of conflicting forces on the yen.
Yeah, let's talk about these conflicting forces, because as you say, the yen's been rising. Japan's denied that insurers are repatriating assets. So why has it been rising?
Well, I think partly it's just on expectations of repatriation. I think the repatriation flows will happen, but probably not immediately. After all, a lot of the life insurance companies in Japan still have to assess the damage, assess how much of the liabilities they're going to be insured for, have to pay out, and it could be anywhere. I've seen ranges between 10 and 50 billion US dollars. So clearly there's still some uncertainty there. I think once we start to see these assessments, we will see repatriation, potentially having some damage on the US Treasuries, where Japanese lifers hold huge amounts. But I think, in answer to your question, I think a lot of it's just expectations of eventual repatriation and also partly safe haven buying of the yen.
So where does that leave the G7, who, as we know, have intervened for the first time since 1990? I mean, is there a never-ending amount of money to throw at this? I mean, what's the line in the sand? Is there one?
Well, I think at the moment, no. I think it was the solidarity with the G7. I think obviously a lot of support behind Japan. The bottom line is the yen, in any case, is overly strong. It's an overvalued currency, stronger in real effective terms and trade-weighted terms, and whatever measure you want to look at, than many of the major and especially Asian currencies. So there was always an argument to weaken the yen, and I think we will see continued intervention in the coming days and coming weeks from various central banks, including the Fed, ECB, Bank of England, Bank of Canada, for instance, and of course the Bank of Japan, and I think this is going to continue. So it does draw a line in the sand. Perhaps the 80 level was a significant psychological level. As we're below that, the risk of intervention obviously was very large.
So as you say, all sorts of central banks will intervene. Which pairs might benefit the most?
Well, I think dollar yen, of course, is going to be the main beneficiary. I think that's where the intervention is going to be focused on. But we've also heard, of course, about euro yen intervention, and that will be another currency pair that central banks will focus on to a lesser degree, but still a significant one. And I think with both of these will be the two key currencies. I think we are going to see, as I say, continued intervention to lift both euro yen and dollar yen.
How is risk aversion right now, Mitul, taking into account what's happened in the last 24 hours with regards to Libya, the UN approving this resolution for a no-fly zone and other measures? Does that make us more risk averse?
In fact, I think at the moment markets have reacted pretty well to developments, even in Libya, where we've had the UN resolution. Also, the fact is that this intervention has helped to some extent to ease risk aversion. And I think to some degree as well, we're seeing a general market fears about the nuclear risk ease slightly. Of course, there's a lot of uncertainty. It's still very fluid. But I think that to some extent there is perhaps a view that the concerns might have been overblown, and therefore risk appetite's improved slightly. But as I say, it's a very, very fluid and volatile situation.
Mitul, thanks a lot. Have a good weekend. Mitul Kotecha there, Global Head of Forex Strategy at Credit Agricole CIB.